following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 29th day of April, just about to wrap it up, comes tomorrow. It'll be the monthly bar that we'll be looking at for all the different charts, and this is going to be very interesting. Do we make peaks in April? Confirmed by a higher high in March and no higher high in April? Well, we'll see what the Fed does today. Now, I usually say that the Fed, any statement that comes out that's very, very important over the years, very seldom has had an effect of changing a trend, which makes this a particularly important announcement. What are they going to do? The job situation is still not very good. All the criteria that they use are really not being met right now. So why would they make any changes? I don't see why they should. They can change the wording, but the actual change, I don't really see it. So let's go to the nitty-gritties, especially since last night in my webinar that I did for subscribers only, I went through a whole bunch of patterns and I talked about how we find the inside wedge, the chap wave inside wedge, what it can do and how it can lead. And I spoke to when I was interviewed by Tom yesterday afternoon. I discussed the patterns that we're looking at. I didn't get a chance, unfortunately, for my subscribers to send out one that I really wanted to do, which I had focused on last night, but I thought I'd follow up this morning. I just had so much to do, and there were so many charts, study charts, and all sorts of things that I wanted to send out that I didn't do it. So let me show you something. Right now, let me run the numbers. The Dow's down 36 at 18,073. After attempting a rally, failing, and then coming back, and now we'll see what happens. The S&P's down 5 at 2109. The comp index is down 13. This is really important. The comp index is starting to fail, and Apple is one of those that's really not leading the charge to the upside. It's holding okay, but it's not leading the charge. You've got gold down about 4 points at 12.10. We're going to watch this real closely after 2:30 p.m. when the Fed makes this announcement. Are we going to see bonds skyrocket to the upside and yields fall, or are we going to see bonds plunge and the yields starts to move up? We'll look at that in a moment. I've got it all set up to look at. And I still think that the Japanization of our bond yields is really the theme of the day, theme of the week, theme of the month, theme of the year, theme of the decade. We'll see if that's going to change just at a moment's notice. Then you've got, and silver's up just a tad, is 16.68. It's interesting that silver's a tad stronger than gold. Platinum's up too, but high-grade copper is having a little bit of a move here. It's at 2.79, still not giving us very much information. So crude oil, this is what I wanted to show you. Last night, I showed a number of charts, and I showed the technique that I use where you've got a left side to the right side. And this is on my webinar. I go through it in great detail. So if you're interested in learning, you can do it for free. Just sign up for my newsletter. You'll get that for free for 30 days as a trial, and you don't have to do anything other than sign up. But then and then just let them know you don't want it if you're dissatisfied, or you do want it and you keep going. But most importantly, it's the techniques that I'm going to be discussing, plus the webinar that's coming up next week, Tuesday night, that I think is going to be very important, because at that point I'm going to be able to show you the parallels between 1929 and now that are starting, the new ones that are starting to unfold. I'm going to talk about clothes, I'm talking about a whole design, a whole bunch of things like that, as well as buildings, skyscrapers, etc. So let's get back to our chart. This bowl formation is kind of a cup or flattish bowl formation. Had a left side that I drew in, with the left side going from the, it was really the high bar in the crude oil contract of the 2nd of January, But I always go to the barrier on the left, which is right now, it's the 29th of December in the crude oil continuous contract. I chose a particular candle a long time ago. Why that candle? Well, last night I was explaining that sometimes the plumb line is exactly the low point or the high point of an arch or a cup formation. And other times you've got to use a little bit of artistry, a little bit of other kinds of analysis. But the most important thing about it is that I like to identify certain candles. But within that context, there's this technique that I call a Chapman wave wedge formation. And that takes the lowest, a particular low left side bar, and you take that and you go to the highs or the lows of candles that form that give you a very good trend line. And I discussed trend lines in detail. And that trend line continued. And where does it intersect? It intersects on the 1st of May, that would be Friday, at exactly this level here of 50 in the 59 area. 59 to 59.66. What have we just done in crude oil? We've spiked up to 58.49, and this is on the actual contract, the June contract itself. And the high that it has to take out is 58.82 to start leg D. And there it is. And isn't that just a beautiful pattern? Isn't that a nice way? There's the Chapman wave inside wedge. I just thought I'd talk about that. I didn't even expect to see it. I was busy looking at crude oil, forgot that I had all this notation. Not sure why we didn't even trade it for my opening call, but that's the way it is. The weekly chart is just making those H patterns that become M lowercase m patterns. Nothing here. Move on, folks. Nothing to see here. But in fact, it is an important phase because it would prove to be a very big positive if crude oil in the next 2 weeks, instead of plunging under 54, 53 and a half support, spirals into the 62.30 to 63.30 area. That'll say, hey, mister, this could be a longer rally for crude oil, and it might go higher. But at this particular point, I'm just expecting a series of arch formations. Okay, now let's do this. Within the context of the various indices, let me do something that I like to do usually on a Monday. I'm going to do it today because tomorrow we close the month. So let's just start talking monthly charts. Oh, this is a 120-minute chart question. Yes, this is the month. This is a 120-minute chart. It made a peak ABC. The C pulled back very sharply, but didn't break the low bar. So you could get an inside buy mode here. But in fact, what's happened is it spiraled higher, and now you have to consider this is D in the 120-minute chart, D/B. Could be a brand new B here, a recycle type thing. But in the meantime, back at the ranch, I'm always a little conservative in my notation. Why? Because history has borne out that when you start to over-speculate with letters, it could very well be that you are setting yourself up for some kind of a failure. And actually, let me do this. Let me find the bar that would be most appropriate, that one there. And let me just do this right here. Just showing you a little bit more of this technique. Okay, that says by tomorrow. Or is it this afternoon on the 29th? Later today or early tomorrow, we might make another spike. And that, if there is another spike, the level you're looking at is 58.82 in the 120-minute chart. Well, 58.82, of course, would correspond to leg D in the daily chart. Oh, isn't this getting, and that would say if it goes 1 penny above, it becomes leg C in the weekly chart. Okay, so enough with that. Peak in the Dan says, Basil, I'm unable to post a chart I saw, but it had a price time match from tops of 2000 to 2007, 2007 to circa today. 394 weeks. Any comment on this? A chart on what? I'm unable to post a chart I saw from the tops. I'm actually not sure which chart you're talking about. Just tell me what it is and we'll have a look. Can't be the crude oil because crude oil is in a different pattern altogether. Oh, on the S&P. Okay, SPX.X. No, we've gone to all-time highs. I'm not sure how you could get that. You know what you might be thinking of? you might be thinking, let me just see. All right, so I'll get all that information. Good question that Danny had. So, we had questions last night. I said today they would talk about them. Yes, CNBC has just opened the San Francisco bureau, live from San Francisco. And they've got this great scene. It's up on the roof, and you got the interviewers up on the roof. The wind's blowing, and the microphone is going whoosh, whoosh, whoosh. Anyway, whenever they open, you remember they opened, CNBC opened a new studio in New York. What was it, about 2 months ago? So have a look at this chart. This chart here, I'm going to continue on my theme a week from last night and Tuesday, my second webinar, the one that matches the 1929s to now, the period that is, and what socioeconomic, political similarities there are. Look, the Dow made its high on the 2nd of March at 18,288. If the Fed does something today, who knows? By the end of the day, maybe we're up at all-time highs again. But what's most important about this particular period is that I talked about a consolidation. It might be a sideways consolidation. My initial thinking was that we would go to lower lows and we would test the 17,200, 17,000 area. All we've done is 17,500s, and we've gone sideways. But basically, we've been rotating through. Look at this. When I say rotating through, let me show you what I mean by rotating through. You want to talk rotation? Look at this. GE. Showing a little bit of strength today. Hey, that's a bit of a market positive, but allows the action since it hit 26.68, going all the way back down to the 28.68, goes down to the 26.55 level. Now it's at 27.14. It's really digesting those gains, but it's doing it okay. It's not too bad, but it's not a leader. Other than very, very short term. That's number one. You got IBM, which has been leading the pack to the upside. IBM is in a leg F/B, hit the 200 period exponential moving average. I've spoken about this a while back. 174.63, and today's high is 174.12. Didn't hit it. It just missed it, but it's real close. And this is F/B at this particular point. And the MACD and stochastic suggests that we might even go to a G and then have a very sharp pullback. We'll see what's going on here. But so far, it's the only leader because Triple M, certainly, if I can find M, where am I typing it? Somewhere here. It's not on the chart. M. Look, Triple M is trying to test that 200-period moving average on the downside. It looks terrible. And the weekly chart has got a sell signal to sell mode. I'm pretty sure it's going to be a sell mode, but I should wait until Friday to confirm that. Everything about it says sell mode. And the daily, the monthly has gone to peak D. This is serious stuff. And it was one of the leaders in the Dow for a couple of years. All right, I'll have a look at that peaky during the commercial. And now UTX, which is the intermediate term leader, is looking very poor. This market is suspect. That's all I can say. I'll be back straight after this break, and I'll check out what PT says to Dan about that S&P chart.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and the Dow's down 43, S&P's down 6. Going into the Fed speak, you can just imagine that they want to get this market a little bit kind of neutral-ish, because anything can happen at 2 o'clock. But what I was saying before is that I don't believe that things can jump. The Dow has still not made a new recovery high. The S&P made a recovery high, but now I'll show you this SPY. We went 21 days from the left side high. It's down. I'm going to type it in. I should remember it. I've spoken about it enough times. February the 25th. High of 212.24. The SPY is the ETF that tracks the S&P 500, or the SPX index, which is also called. Then what happened is it comes down to 204.12 on the 26th of March. Edit 326, and it takes in 21 sessions. Then there's a left side, right side plumb line that goes to that exact low. And what does it do? 21 days later, it goes to 212.48, right there on the 27th of April, and had a lower high yesterday to make a peak E. So far, it's hugging the 9-period exponential moving average, the black line. The stochastics turned down under 80%, but the day is young. You're looking at a daily chart. To talk about it as if it had closed would be silly. The MACD is still good, turning down, but good, but way, way lower. In fact, both of these indexes are showing much less internal strength than they did have when they went to the high of 212.24 on the 25th of February. So here we are, 2 months later exactly, and also at a peak of significance with a Chapman wave silent doji. And now what we're doing, we're looking at the unbalanced volume, very weak, the stochastic, very weak, and the MACD, good, and not having turned down. So I'm not putting in the weak category, I'm just putting in the category of being good. So it's a price performance that's going to town. And if at 4 o'clock today, regardless of what the Fed says, if there is an interpretation that says either uh-oh or woohoo, the woohoo will have the price spike, and then maybe we're going to have a retest to have a cup and handle, one of my least favorite patterns, attempt at a double top of 212.48. Remember, that's the double top, the drop bucket formation. Or what you're going to get is a pullback into the wick. And I can just tell you this, if at any point, this is almost like a Chapman wave Roman candle, the SPY is trading at 210.13 or lower later today, you will probably see a test of the low of yesterday of 209.33, either by the close or tomorrow morning. That's the way I'm looking at it. All right. So I thought I'd show you this beautiful cup formation with the left side, right side price time match to coincide with the one that we just saw that's potential in crude oil. And I wanted to do something else. When we're looking at the currencies, look what happened to the dollar. Whoops, wow, look what happened to the dollar. What is gold doing? Why isn't gold up another 20 bucks today? This is really, what a fascinating market this is. The parallels that you normally expect, the inversions, etc., don't always work out. So gold has broken every bit of support. And yesterday I said if it goes into the 95, I believe I said 95.50 to 95.30 area, that's going to be a big negative. Well, it's trading right now 95.01. So that's made the cup, there it is. That's the same pattern we looked at in the IBB. That right shoulder failure pattern in the weekly chart of the dollar index. So that makes it, this is definitely now, I have to wait for the week to finish, but this is definitely starting to look like it's going to be a peak E rather than a B, E/B. And that makes it a more serious decline. And let's go to, I wanted to look at, bonds. I haven't done bonds yet. TBT is the opposite. I had spoken to Tom yesterday. He had spoken positively about the TBT, or the weakness actually of the TLT. I spoke about the inversion of the TLT, which is the ultra short, even 20-year T-bond treasury bond fund. And I said to him, it's gone to a leg D in the interview, and there's almost like a left side, right side price time match. But what's really important, I don't know if I drew it in yesterday, but I drew this in, and you've got yourself the Chapman wave inside wedge target line, and that says it should hit 45.43, and right now it's at 44.86. 45 in the 45.40s, and that's the repellent line. I'll be back. Basil Chapman, Time Conditions Hour. Dow's down 53, S&P's down 7. I'll be right back. The second day before the end of the
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the news is out there. So Bernanke is going to go to PIMCO. Now, I'm wondering about that. Is there any conflict of interest there? I'm sure legally he would never go there without having legal backing. But morally, I mean, is that really what you want? The head of the Fed goes to advise. He knows inside information. He knows things backwards and forwards. Well, that's the way the system works. All right, let's get down nitty-gritty here. Euro is in leg D/B in the daily, still making those arch formations, but we're going to know very soon whether the dollar is able to hold. Remember, my thesis has been that the Fed would rather see the dollar pull back more and bonds stay kind of. Look at this. Here are the bond yields. First of all, the chart that I've got up here is wood. You remember iShares Global Timber and Forestry ETF? Look at how it's struggling at that uptrend inside track, Chapman Wave inside track propellant zone. If that fails and it goes from the 54.39 level it's at in the next 2 weeks underneath 52.30, that's not going to be a good sign at all. Look at the HGX, the Philadelphia Housing Sector Index. Peak F top at 238.32. Look how it's falling. If you could see, I'll get to the bonds in a minute. If you can see Lennar, look at this. Lennar touching the 200-period exponential moving average in the 45s, when in fact 53.67 was the peak D high. Look at Toll Brothers, TOL, makes a 40.33 peak F doji high, double top, and plop, it comes down and it's really close to the 35.75 200-period exponential moving average. Remember last night I spoke about the two moving averages of importance, the 9 EMA and the 200 EMA. 9 EMA shorter term, there it is. Look at that beautiful 9 EMA support level becoming resistance in Lenore, 37.59, the resistance. And look at the 200 period. All of a sudden, you didn't need it. And all of a sudden, now you want to look at it because it's very important. All right, let's go back to the bonds. I want you to show you the yields. Now, if I can just find the darn thing, where did I? Oh, there it is. Look at this cluster formation way back in 2007. I think it was June. Yep, June. Right there. 5.4% in the 30-year and the, I made that white, but it should have been yellow. It should have been 54.08. That should be white. So that was the high for the 30-year T-bond yield. And then what does it do? It makes its way all the way down to the most recent low of 22.26. And now it's having a bounce. And there's that trend line that's going to be very important. Remember, I like these trend lines, especially the long-term ones, but only for a moment. And then after that, they kind of become irrelevant. So I never make a big fuss about them. I just say, hey, it broke out. That's not a guarantee that it's going to soar to the upside. Other things have to happen. You've got to have that falling axe pattern. You've got to have a whole bunch of things. You've got to have a turnaround that might be V-shaped or a cup shape. But most importantly, the resistance is going to be, if it's this week, it's going to be 28.80, and right now it's at 27.71. We'll know after the Fed speak what's going to happen. Now, this is going to be very important. Look at the cluster formation. Remember I spoke about the cluster formation at the top in June of 2007. Then I said I'm getting a little cautious here, and this was I was talking about the potential to invert the yield curve, or maybe a steepening of the yield curve. You never know quite how it's going to formulate, but look what's happened right there. You got a cluster formation. That makes this particular period, even though I've been talking about the Japanization of our bond yields forever, it makes it really important. What happens if there's a breakout and the 30-year T-bond yield goes to above 30? That's a breakout of consequence. Then the next level of resistance is going to be 31.33, 3.133%. And we'll see what happens here. Look, the yield between, look at the cluster formation. They're getting closer and closer. Would that be flattening? Would that be, well, we'll see. We're going to be watching this really closely. Would there be a steepening? Which one's going to lead? Very interesting period we're in right here. I keep circling it. Okay, that's what I wanted to show you. Also wanted to show you something else. Look at this. This is gold. It's held steady within a downtrend, but it hasn't really broken to the upside. It's just holding steady. And this kind of rectangle formation right here, that can very well become a fulcrum to the downside. You're going to have to watch this really closely. Not now. I'm talking about within 3 months. We'll be looking at this again. We'll give the full color of blue. All right? We're going to be watching that. Silver is pretty much the same, but it's a little weaker. It has been a little weaker than gold. But look at high-grade copper. It just makes lower lows and lower highs and lower lows and lower highs. So any rally here is going to be really important. And look at platinum. Platinum is very much like high-grade copper, and it keeps making lower lows and lower highs. It showed no resilience by being able to hold any bounce in the monthly chart whatsoever. Now look at crude oil. Crude oil has been in this very long-term wedge formation right here. Very long-term. All right? I'm going to color it in blue as well, so we can look at it in another couple of months' time. Inside full color is blue. Then it breaks down. Now it's having a little bit of a bounce. Is this going to be a little bit of a bounce? Is it going to be much? I suspect it's just a little bit of bounce. You know what? I'm also suspecting that we've got international weakness in the economies, and that the recession that I said that I believe we're in and we won't know about it until you hear Kate Schiller or someone who's well known and gets interviewed all the time talking about it. My suspicion is we've been in it for over 5 weeks already. That's what the market's been saying to me. So we'll know in the shortness of time. Who used to say that? Used to be a guy on CNBC, Ed something or other. And he used to say, in the fullness of time. And I thought, that's really great. It gives you a perspective. It gives you time. Unfortunately, he died young. It's a pity about that. He was very good. He used to look at the economy and talk about the yields and all sorts of things like that. All right. So now I want to look at, just quickly, I'm looking at questions. Yeah, no questions. All right. So what we're looking at is the cluster formation. I want to open it out so that you can get a better perspective. So it's the T-note yield is white. The 10-year T-note, the T-bond 30-year is white. The 10-year T-note yield, TNX, is this goldy color. And cyan is the 5-year T-note. You can see it a little bit better there. So look what happened. The 5-year never even broke its 11.18 low. The 10-year and the 30-year broke their lows. So we're looking at something that's really interesting here. And the way we come out of it we'll see by Friday at the close what happens to the weekly charts. Going to be very, very interesting. All right, question about Microsoft. I had that question last night. I said we'll deal with it today. I don't want to really deal with it right now. Tomorrow's Technical Friday. Maybe I'll talk about what's happening with the new San Francisco branch of CNBC, the ones here, how this corresponds very much to excessivity, that period of excessivity I always talk about. I don't want to do it now. But what I do want to look at is the 48.14, 48.13. This is either leg F or it's recycled higher in Microsoft. It's so fascinating that we're looking at the old school. Look, Microsoft had an I've got it here as well. Oh, I love this. I do these charts and I don't even know what I've done because I do so many charts every day, every night, every hour of the day I'm doing charts. From Microsoft's high back in November, I think it was of 1999. Let me double check. Of December of 1999 at 53.97, it plunged to a low of 14.87. The left side, right side price time match has in October of 2015, it should be retesting the 53.97 high. Oh, that's so fascinating. We'll have a little moment in the break before the close of the show, before you go to Larry Pesavento. Wow, it's going to be great to hear Larry talking about golds and stuff today. All right, let's go to Brent and Martinez. Brent, how are you?
Good morning, Basil. How are you?
You heard me talking about copper, huh?
Yes, I did. I've got two charts. You take your pick, either Diana Shipping DSX or Freeport FCX. I'll leave it to you.
Okay, so let's. I've got Freeport up right now, 1943, 1943, A, B, C. So that's a phantom peak. I'm going to take it as a phantom peak because I like to be a little bit conservative. So that's A, B, C, and we're in D right now. Everything about it says it looks like it could be a D, but I'm putting this in red to say, or pink, to say that's a phantom peak I did right there. It wasn't red, it was a double top at the exact high. So FCX, Freeport McMoran is trading at 22.80, up 12 cents. Had a spectacular move to the upside. Beautiful MACD, beautiful stochastic, nothing negative here. And it's in leg B in the weekly, like many of the charts we just looked at. Monthly chart is just horrible, but this is the first time that there could be a bounce to retest the 26.69 level of the 200-period moving average, but let's go one step at a time. So you're in it, and the question is, what do you expect? I think that this one is pretty straightforward. As of now, if you got a core position, I would have that core position. I would now use a trading position to do one of two things. One is, because it's acting so well right now, I would say do nothing, but I would then have 1/3 position of what you've got, and I would put a stop, a trading stop. It's at 22.80. I'd make that trading stop 22. I'd make it quite tight, maybe 22.56-ish or something like that. Why? Because there could be one more bounce. Let me go to the 120-minute chart. Whoops, I don't have it in front of me. 130 is a 30-minute. I want a 120-minute. Where did it go? Oops. That's interesting. Oh, it must be behind here. Yep, there it is. Come back. Thank you. So in the 120-minute chart, it's starting to flatten out, showing a little bit of tiredness. But it is a really nice-looking short-term chart. The weekly, I have to wait for Friday at the close. A, B, C, D. It's an E right now on the way up. I'm going to make a suggestion. I know that it's kind of the way you like to trade. So my suggestion is one of two things. You could either take a little bit off now, and you could treat that as a trading position, and you want to see how it comes back to the 2130 to 20.80 area over the next 3 to 4 sessions. If it does that and it holds very well, I'd put that position back, treat it as a trade, and if it takes out whatever the high is today or tomorrow, then I'd have a trading stop. The moment it broke above whatever the high is after coming back, I would take that position and either take profits again, or I would have a much tighter trading stop. At this point, I would keep the call, and I wouldn't do anything, but I would like, if you have a chance, call me Monday or Tuesday, and let's look at it again. By that point, you'll know whether it's going to break out because of whatever the Fed does today, whether it's going to break into it really needs to break above that whole resistance area of 2377 to 2389 that was made back in December and January. If it can close above that, all of a sudden, you've got a chart that says the monthly has got a magnet towards 2451, 9-period moving average, and then we can think about 2669. But this could certainly be one of those things that we're looking at time and sporadic stair-step moves in price, and then it just holds back and doesn't do anything, but it doesn't break down. That's the thing about the charts. They're looking like they're trying to make stair-step moves up into sometime maybe the 3rd week of May, maybe the 4th week of May, and then they might start coming back down to test support. I love the fact that you're in it. And what was the other one? Dry ships? No.
Diana Shipping.
DSX, right?
Yes.
Yeah. So, look at DSX. This is very interesting. Why is it? Why are some of the shippers moving here? Not all, but some of them, when in fact there looks like weakness in the economy. I don't know. They're always a little late to the scene. These guys are always late. I remember when the container prices were like 130,000 or something a day, and South Africa had locked in a price at the exact high. I'll never forget that. They locked it in at the high for like 2 years or something. Boy, that was smart, wasn't it? And it was the exact high. So let's look at it. Do you have a position?
I do. I'm long this as well.
Okay. Then this is a little bit different chart. This one, the way it's looking, it's making a very solid series of moves to the upside. I'd get very nervous if it suddenly took out 6.25, breaking the 629 9-period exponential moving support and closed at the low. Unless it does that, so far it looks like it's just got a little snail crawl, nice percentage moves, but not a big on the chart, because the weekly chart really looks terrible and the monthly looks absolutely like the Eiffel Tower, capital A, up, straight up, hits the 200-period moving average, bam, comes down again, equal amounts. So yeah, 100% move to the downside. I'd say it's ready for a little bit of a bounce. It's acting well. I'm going to say nothing about it other than stay with your position. I want to have another look at this on Monday morning. Over the weekend, I want to have a look at it to see whether I think it can have staying power to get to the $687 level. So I hope that helps you.
It does. Thanks so much, Basil. Have a great day.
Congrats. Nice trade, and thank you for calling, Brent. Have a great weekend. So I'll be back straight off this, folks. Dow's down 76, S&P's down 9.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, so we've got such great listeners at TFNN. It's amazing. I can't say everything I've said today. I've had a response and I've got an answer to. So I said Ed. I couldn't remember his name. I can picture him so looked like a raisin. He was just a really guy, had a wonderful smile. Ed Hart, that was his name. He was really good. He was old school. And miss him. So, I mean, we're talking a long time ago. And then Chris has asked me, Mr. Chapman, well, thank you very much, Mr. Chapman. I appreciate that. Could you please talk on your show regarding TLT and perspective, how it has recently reacted to the market and what you expect should the stock market go up or down from here? Could you also talk about the comp index and the Chapman wave technique, and then something about Bernanke. Let me skip the Bernanke part. I don't have time right now, so let me just go to the TLT. This is what I'm looking at. So the TLT. Remember what I spoke about just a moment ago in the in the yields. So the TLT is making that pattern. You know the pattern. Last night you spent quite a bit of time, and I've done it on the show here, talking about in the Chapman wave. There's a pattern at tops that you come down sharply, and then all of a sudden you have a rebound. A rebound within the rebound, you could have a 120-minute chart or a daily chart or something like that could give you your peak ABCD within a buy mode within it. But sometimes it just goes a single leg A. It goes up A to A minus because it fails, or B minus. Could even do the C minus is when it goes even higher, just like the IBB did. And now what we've got is if the TLT closes, it has to close decisively under 122.97. And 124 is the 200-period exponential moving average. My suspicion is that I don't think that the Fed is that. What is the Fed today, and a day like this when there's such big unrest everywhere? You think the day's going to, they might change the wording, but they're going to do nothing. That's my impression. Hey, could be wrong. Could be a very interesting session today. But that's what I'm looking at. So I'm suspecting that we're still within the Japanization of our bond yields. And this is just merely the result of what you often see, the H pattern forming in the weekly chart. But taking out the low says, you're wrong, mister. Yields are going up, and TLT is going down. That's bonds. So at this particular point, I think we're real close, at least to a bounce attempt based on the 120-minute chart, but it might only be an attempt. I think we're going to find that we make what we saw in the GLD, so then much later on, maybe bonds start to rally. But at this particular point, I think we're ready for the lowercase m formation. I hope that helps you. Those are the levels to watch. Without breaking down, if by Thursday of a week from today, exactly a week from today, if the TLT is close to 129.50, 130.40, we've got that M formation. If it's broken down, you're going to know probably by the end of the day. I mean, okay, that was the question. Now the comp index, was that? The comp index. Yeah, this is very interesting. The comp X. The comp is the COMPX. That's how I get the comp index. Made a peak C/F in the daily. It's an leg E in the weekly. But, we were talking, I actually wanted to bring this chart up. You remember Microsoft we were looking at just a moment ago? I said I'd try to get to it. Tomorrow's Technical Friday. But the comp index has got a left side, right side price time match that goes exactly to May. And that May says it should try to test the 5,132.52 all-time high of March of 2000. Isn't that interesting? All right, folks, I think we're just about to wrap up. Did I hear music or did it just go blank? I'm not sure. I think I'm still speaking. Yep, I'm still speaking. Okay, so this is it. The NASDAQ Composite Index is in leg F/B. If perchance it takes a breather before it tries to tackle that all-time high, we will know tomorrow, Thursday tomorrow, Friday at 4 o'clock, whether or not there's been a pullback below 4,950. And that'll say, watch out, we could make a peak in the weekly. Hey, I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.